A recession may be on the cards, ladies and gentlemen, but the market doesn't look like it's fazed by it because a recession usually fixes three main situations that we have got that are currently weighing on stocks: high inflation, high interest rates, and a stubborn-ass labor market. In tonight's video, we're going to be breaking down Bitcoin price action, so make sure you stick around for that bad boy because Bitcoin is showing some very interesting price action sitting around that 28K zone. And as we go in towards the end of the week, we're going into the volatile weekend. Again, make sure you pay yourselves, take some money off the table because the weekends can be a slaughterhouse for retail traders. More importantly, we're going to be diving into this war that's going on right now between China and Elon Musk, where he keeps on dropping the prices of Teslas so that he can then be against all these new Chinese electric vehicle manufacturers. On top of that, you got China now having to experience sanctions on prevention of certain exports on semiconductors. So China's got his back to the wall and it's trying to fight its cause. So let's get with the flavor, ladies and gentlemen. And if you are new to the channel, mad love and respect for passing through. Let's have a conversation. So a recession will be welcomed by the marketplace, and we can see bright as day that the market is not even fazed by it. Why? Because it wants it. Because that's the only way you can get inflation down. That's the only way that you can stop the Federal Reserve from increasing the interest rates and start working on decreasing the interest rates. And even more so, a falling labor market is going to look good for these companies because they won't need to hire as many people, and that means they're going to be able to show more of a profit on their balance sheets, and then happy days to all the dividend holders. This is the situation that we're in right now. Because of high interest rates, the banks are in essence starting to crumble. That's evident with an article like this. Corporate credit crunch is just getting started. And we've said it before. The economy can't move if money isn't moving. And if credit is becoming tighter and tighter, there is naturally going to be a contraction in the economy. Now, what you've got to understand about cycles in the economy, you have expansion and contraction. All right. So an expansion is that interest rates are at a reasonable level. Money is cheap to obtain. That's why you've seen loads of people prior to the interest rate increases, loads of people were buying up loads and loads of properties, okay, on variable rates because they didn't think that the interest rate was going to go up that much anyway. But given that we are now at around about the 5% mark, okay, well, 4.75 mark, you've got to try and put into your mind that how expensive it is right now for people who have mortgages, especially on a variable rate. Now, if it's starting to get harder for the credit companies and, of course, corporate America, what do you think that's going to look like for the consumer? Mortgage rates are too high for people to go and take on mortgages. They don't want to service those. So you've not only got people holding on to cash, it's not being put to work. And that's what's going to slow the economy down. So the Federal Reserve has to start getting engaged into the idea of encouraging maybe a man-made recession, just so that they can start working the interest rates lower to start money moving around again. So that's where we are in terms of the marketplace. How long the credit crunch is going to work for, it's mainly going to affect the bigger players because whatever happens with those guys is naturally going to get pushed onto the consumer. And we've already had it pushed onto the consumer because inflation is thriving now at 5%. When is it going to give? Now, let me draw your attention to something. Check what's going on in the world of Asia. Now, listen, Asian stocks, as we declared yesterday, a lot of investors are taking their money out of Asian stocks and putting it into American oil. All right? Now, in this article, it goes on to talk about that the US is going to start restricting China tech. Well, we know what that means. We know that the US is gunning for the semiconductor business, and Biden himself wants to create the US as a hub, as a place for semiconductors to be created. Because right now, it's all about Taiwan, because that's where the world's largest producer of semiconductors is. That's why China's trying to get into this Taiwan space and try and take over, because it's the only way that China can really give it to the Americans. But right now, the Americans are actually restricting China's access to tech. So China's got the back up against the wall. And what's even worse, you've got Elon continuously reducing the cost of a Tesla, because all these Chinese electronic vehicle companies are all coming out with bigger and better. But what we want to be focusing on is what is required to make these vehicles: lithium. If we're going into the era of electronic vehicles, and that Tesla as one company, and then you've got other companies that are trying to compete with Elon, we're probably going to want to get involved in the raw material in principle that is needed to even allow these companies to even be in a pricing war with each other. Check this out. The world's biggest mines of lithium. So if we go up here, world's biggest lithium producers, it's important that we know who these guys are. Now, they are predominantly in Australia, Singapore, you've got Brazil, and there's a stock, or the top 5 lithium stocks that are listed on the US stock exchange, okay? It will be good to keep an eye on these bad boys, because if we're going into this electric vehicle and there's already right now, even though it's slowing down, it's something for the future, because at the end of the day, we can't do nothing with these vehicles if we don't have the source. So the first company I want to talk to you about is Atlas Lithium. All right, so this company right here averagely trades around 438,000 shares per day. Now, that is relatively light. You really want to be trading or getting involved in a stock that trades over 1 million shares per day so that you're not prone to volatile price movements. When we actually look at this company on the monthly time frame, you can see that they've only been listed back in 2013, so it's still a relatively young company. But more importantly, we go to the weekly time frame, you can just see how volatile it is, okay? Now, not so long ago in the actual company itself, back in December 2022, there's obviously a big find, okay? Now, this Brazilian-based company is part of an emerging market. So imagine when Apple started to come about, okay? This would be, in principle, the Apple of lithium. As a figure of speech, you know, to put it into perspective of where we could be going in terms of lithium. Is lithium to the electronic vehicle market what oil is to the car market, okay? That's what we've got to try and consider. Now, its statistics are not even there. Look, we've got a negative earnings per share year on year. They're not really declaring much. Management owns 47% of the stock. It's in Brazil, okay? But they still trade on the US stock market because there is interest, okay? Another company that you could be checking out is, of course, Piedmont, I don't even know how to say it, Lithium. So we'll go to the actual ticker symbol and have a look at that bad boy. And we can see Piedmont Lithium, there you go. So this company has a little bit more of a market cap, and there is involvement by fund managers. Down here, you can see it says about 34%, and management owns 2% of the shares, okay? Now, 120% increase on its earnings per share going into the year 2024. So as of play right now, back in 2023, they were earning at $8.69 on earnings per share, all right? Now it's looking at projected to go to $19.13. That's pretty good, again, in the lithium business, okay? And it's quite cheap, relatively cheap for what could be a huge market. And we already know it's going to be a huge market because Elon is in a pricing war with all these other companies. When you get companies that are starting to emerge, okay, you are effectively getting in on the business because this is the source. These companies can't exist if lithium doesn't exist. Now let's get to some Bitcoin price action. So what's the story with BTC? Well, let's just go over to our dearly beloved bookmap and understand where the liquidity sits. Zoom out on the chart and you can see bright as day that we have 2 zones, very particular zones in Bitcoin. 428 Bitcoin orders at 28,300. But as you can see right now, Bitcoin is toying again with that VWAP. Now, the VWAP suggests to us if they're selling aggressively from the VWAP, then as long as Bitcoin holds this zone, an attempt back up to maybe sell from that zone again may be on the cards. But if we look back, you can see what's going on down here. There seems to be an influx of liquidity down below, which could be favoring prices edging towards that critical 800 EMA on the daily time frame. The orders are coming in and they are thriving. Look down below, you can see you got 541 Bitcoin orders between 27,720 and 27,680. liquidity. Beyond that, we got just shy of nearly 1,500 Bitcoin, actually 2,000 Bitcoin between 27,600 and 27,520 happens to be the zone at the 800 EMA. Again, this is why it's so important that we focus on that zone. Go to the daily time frame, zoom out, have a look at where we are. We are edging closer and closer to that critical zone. Get on your charts, mark off the $27,612 zone for Bitcoin, because if Bitcoin breaks this area, Bitcoin is going to start breaking down aggressively, because we would deem it as the last area of support, because this is the first time Bitcoin has actually made it back to the 800 EMA on the daily time frame. Look, the last time it went there, it sold away aggressively from it. All right. But now we're in a different situation. So it's all or nothing for Bitcoin at this point. If it can hold this zone, happy days. To be precise, Bitcoin needs to stay within this area here. Has to stay within the cloud. That would mean between 27,612 and 26,500, give or take. It needs to stay in that zone, because if it doesn't, it's going to roll over. We go into the liquidity of the chart, and you can see Bitcoin on the 7-day chart. Down here, we've got a pool of liquidity which sits at $3.7 billion worth of long liquidations. All right. The shorts are starting to come in. We've got 4.6 billion right there. And we go to the monthly time frame, and you can see that we have got a bagload of liquidity, which we noticed from last night's live stream. Check this out. Nearest pool of liquidity, the highest concentration of liquidity, shows at 27,400. We've got $18.1 billion worth of long liquidations. Just before that, at 27,700, we've got $9.2 billion worth of long liquidations. The money is there, ladies and gentlemen. It's just a case of how long it's going to take for them to go to it, because the market maker is going to be tricky. He's either going to attack this liquidity and then bounce away from that zone, or he's going to make these guys believe that this could be a point of support, and he's going to get them to commit even more in this chart, and then price will move back up. More people will go long, adding to this area of liquidity, which means that this $18.1 billion worth of long liquidations could effectively turn into $22 billion worth of long liquidations, and then Bitcoin could come back down and eat the liquidity. Again, market maker doesn't care about your opinion of price. He cares about how many of you have got your margin trapped up in a specific area that he can go to and take. That's the sad truth of the marketplace, ladies and gentlemen. Going back into Bitcoin on the smaller time frames, we're going into the weekend, and you've seen over the last 24 hours or so, Bitcoin has consecutively been dropping non-stop, but it hasn't been aggressive. But in the last 8 hours, you can see volume, it's not been that much. So that's a promising sign, but it's not got to a point where we would initially think, okay, we need to hold this range. That's why the 800 EMA at the 27,612 zone on the daily time frame is going to dictate if Bitcoin can hold this whole zone, because the last time Bitcoin came to this zone, it held. So we're waiting to see if the guys are going to step in again at this point. Okay? Now, moving on from that, you have the 30-minute time frame. Now, remember, speaking about last night's live, when we were breaking down the 50 EMA cloud and its importance, we've now noticed on the 30-minute time frame that the attempts at price to try and break above it seem to be faltering. Look at this zone here. First attempt on the 30-minute time frame failed. Next attempt failed, even with a green vector candle. And then it's now done the test today and failed at that zone again. But this time it's managed to get above the 50, but triggered the orders, but then pulled back again. That is a cause for concern. We've got this vector candle region right here that we need to be very careful of, because it is another zone that they can grab attention. Because remember, the traders that went short in this zone went short and got liquidated. Price come back up into the 50. Price will naturally gravitate back to a zone like this so that they can take advantage of retail traders who are fighting in their minds to work out if Bitcoin is going to continue higher from this point or lower. So Mr. Market Maker is facilitating the chart. He's giving you the opportunity to believe that price can continue lower. So you go short, he then instantly reverses it and grabs your money off you. That's why I always suggest to you, be mindful about the leverage that you use when you're trading so you don't get shaken out. Because things like this on the 30-minute time frame are examples of what can shake you out of a trade, okay? Now, when we zoom out ever so slightly, you can see that we are going into this area, which is the area of support from Bitcoin on the daily time frame. So we're naturally going to assume that as long as Bitcoin stays below the 30 EMA cloud, we're expecting lower prices. What do we need to see price do? We need to see price break above the 30-minute time frame and retrace back into it so that the 50 EMA can turn edgeways like this, and then, of course, resume its trend back up to the upside and start taking back some of the vector candle principles over to the left of the chart. But until you see that happening, guys, the direction is momentum is pointing down lower. So when we put things into perspective, we know that we're dealing with a very important zone in Bitcoin right now. Now, going into the Asian session this evening, we might get a little bit of a surprise play. So be on the lookout for the way Bitcoin is going to behave from now until that point. Eyes on the 50 EMA cloud on the 30-minute time frame. If it can't breach above that cloud, then we're only favoring price to move lower. Your job as a trader is to try and work out how likely momentum is going to develop in one zone to lead price lower or higher, okay? Forget price. But we know in this instance, at 27,600, there's going to be some flavor at that point in Bitcoin because it's the 800 EMA, which would be deemed as the last area of support for Bitcoin to hold this current rally to the upside. Okay? Mad love and respect, ladies and gentlemen, if you've made it this far. If you want the hybrid system, go to tradersreality.com, download it free of charge. There's a step process on what you need to do to get access to this. It is free, so just follow the steps on there. And if you want to take part in the Patreon and get access to the live streams after the New York live streams, where we talk about potential setups that could be brewing going into the New York session itself, check out patreon.com/tradersreality for more information on that bad boy. All right? Take care of yourselves, pattern watchers, and I'll be checking in with you all on Monday. Peace.